Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies, Palantir Technologies, Aquestive Therapeutics, and Tesla stock. We will be analyzing 4 main articles to go over the latest news updates for each of these companies, to where the first one is titled, "The CEO of Sofi has just bought 50,000 more shares of Sofi stock despite the share price declining," which is very bullish for overall Sofi investors. After that, we'll discuss the latest news updates for Palantir Technologies, their newest price targets from professionals, as well as their PS ratios and accounting ratios to determine where this company could be headed in the future, especially after their approaching earnings report. After that, we'll talk about Aquestive Therapeutics, ticker symbol AQST, which destroyed their Q1 earnings report and revenue estimates, which has ignited the overall share price, causing the stock price to rally very aggressively. So many stock traders are making a lot of money from this particular stock, and I'll be adding the latest news updates and price targets and my opinion on this company as well. And then lastly, we'll talk about Tesla's TSLA shares, on how they are trading at merely $168, but how they could surge up to $250 according to professionals by the end of the year. We'll also be talking about their latest news updates regarding their delivery numbers over in China and whether or not investors would be better off investing or selling this company during the short term. So for more videos just like this one on the best stocks to buy or the latest news updates for any of these companies, remember to go and annihilate that like button right now. Comment your thoughts down below about which of these companies you want me to report more on. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents because it helps me out a ton so I can make videos just like this for you. And without further ado, let's jump right into today's stories. Sofi Technologies, as you already know, operates as a digital bank, and Sofi's share price has been down by around 20%, but many aggressive investors are using this as a buying opportunity, including the actual CEO of the company. The CEO doesn't seem to be too concerned with the recent stock price volatility or the fact that the Sofi share price has fallen by around 20%. Instead, the CEO took this as a buying opportunity to accumulate even more shares in this overall company, and some wise investors should do the same as long as they are not already overexposed. In my opinion, anything over a 5% initial portfolio allocation to any singular risky growth company takes on unnecessary risk of losses beyond that point, because there are a lot of other companies on the stock market that also deserve your capital. Sofi is just one of many phenomenal companies that are trading at a substantial discount, which I will talk more about next week in a video about the best cheap stocks to buy right now. Sofi Technologies is anticipated to experience a huge rebound, which is why the CEO has decided to buy more shares. The CEO purchased roughly 50,000 shares of Sofi stock worth approximately $236,000. The average share price for this investment was $4.73, so he's using this as an opportunity to lower his average cost basis, which is increasing his overall future potential of returns for this company. And he currently holds close to 6.3 million shares of Sofi Technologies, which makes sense because he is the CEO of the company. This not only should communicate to investors the overall confidence that the CEO and management has in this company, but also they should get some confidence in this overall company as well, considering that a rebound is on its way once the company finds a bottom. Many professionals already think the company found a bottom, but there is still future upside potential, as we will talk about later in the video where we go over their latest price targets. The CEO has actually periodically bought Sofi shares ever since the beginning of the year, to where he has made multiple investments. He has purchased around 45,000 shares at an average of $5.39, and then he also reported accumulating 180,000 shares in March at an average price of $5.52. So clearly he thinks between the ranges of $4.73 and $5.52, this would be a buying opportunity for most investors as long as they are not already overexposed to this overall company. However, I do want to point out that not many other insiders are buying Sofi shares. It seems that only the CEO is doing this right now, but Wall Street is echoing his overall confidence, to where the average price targets and price predictions for Sofi Technologies, according to 12 very prestigious financial institutions, say that this company is undervalued right now. The average price target for this company is $7.50, while my own personal price target is $7. I believe the company is worth $7, and if you can snag the company below $7, you should make profit over the next 12 months. However, even if the average consensus estimate of $7.50 is correct, we're looking at roughly 50% upside potential for this stock, making it an amazing buying opportunity. Credit Suisse has a $7 price target on this company, Goldman Sachs has a $6.50 price target on this company, and Wedbush has a $5 price target on this company. However, the most bullish investor and institution right now has as high as a $10 price target, meaning you can more than double your money in certain circumstances. But even if the stock were to go from $5 up to $7.50, this would be an amazing opportunity to make profits, as long as, hear me well, do not buy the company if you are already overexposed. As investors, we need to practice proper risk management and not overexpose ourselves to any singular risky growth company, because beyond that point, we are taking on unnecessary risk of losses. So if you want to be a good investor and not a gambler, please take that perspective to heart. So overall, I'm still very bullish on Sofi Technologies, and very aggressive growth investors should accumulate shares while the price is cheap. However, as of right now, we don't know if the company has officially hit a bottom before they are going to start to rebound, but we do know the rebound is coming, especially as we start to approach the end of the year, where this company is supposed to be GAAP profitable, which is going to be a phenomenal catalyst. Next up, let's talk a little bit about Palantir Technologies, ticker symbol PLTR, which is a big data and analytics company which serves commercial enterprises as well as government clients. Right now, many Palantir investors are looking forward to their upcoming earnings report, which we talked about in a previous video, but I want to make investors aware of their overall accounting ratios, specifically their price to sales ratio. Right now, Palantir Technologies trades for $7.40, while experts from both sides disagree on what this company should be worth. Many bearish analysts believe the company should be worth around $5 as of right now, while other analysts believe the company could surge up to $15. And depending on which analysts you agree with or what professionals you gravitate toward, this should determine whether or not you buy or sell the company. In the meantime, I have a hold rating on this company because I'm very intrigued to see what their earnings report will cause the stock price to do, because it's going to set them up on an interesting trajectory over the next 3 to 4 months. Palantir Technologies also is trading at a premium right now, and this is largely undisputed. Right now, the PS ratio, or price to sales multiple, is 8.2 times, which is very high, especially compared to the software industry in which they trade in, because the industry's PS ratio is around 4.2 times, making Palantir almost 2 times more expensive according to this overall metric. However, does Palantir's growth justify this higher PS ratio? Well, let's talk about it. Palantir is currently doing a very good job at scaling their overall revenues, especially compared to their competition and the other companies in their industry. Many investors are expecting Palantir to achieve strong revenue performance and earnings per share in their upcoming earnings report, and this will help the bullish investors justify buying Palantir at this overpriced price point. However, Palantir Technologies' PS ratio seems higher than it should be, even despite their overall growth, and here's what I mean. Analysts, professionals, and experts who are covering the company believe the company will grow at around a 19% CAGR, or compounding annual growth rate, over the next 3 years, which is quite positive. And when we compare that to the overall industry, the industry is only set to grow at a 13% CAGR, or per annum growth rate, over the next 3 years. However, considering that Palantir's growth is not double what the industry is, therefore they should not have double the PS ratio, making this company rather expensive right now. But if you are a long-term investor into this company, depending on how long you want to hold this company, you could make profits over the long term, because I personally have that view of the company. As of right now, most investors are expecting and anticipating strong future growth from this company, and they are willing to pay a premium for the stock now, considering its future growth trajectory. I would actually disagree with analysts, because analysts say Palantir will bring in a 19% CAGR. I actually believe they will bring in a 15% CAGR over the next 3 years, and we will see this reflected in their earnings report. So please take a note of that prediction. However, over the long term, I do think Palantir Technologies will grow into their overall valuation, and then beyond that point, it will start to return value to shareholders, especially since the company is technically already profitable. So overall, I would say this is a pretty good news update, but investors do need to be aware of the rather high premium that the company is trading at right now, according to their PS ratio. But over the long term, I really don't think this is going to matter that much, because it's a fundamentally solid company, and they also have virtually no debt on their balance sheet and over $2 billion. So this company is very fundamentally solid, and they are set to thrive in the future. So overall, a very good news update for Sofi Technologies and Palantir Technologies. Up next, let's talk about a penny stock that a lot of people are talking about right now that I've also reported on in the past, called Aquestive Therapeutics, ticker symbol AQST, which had a phenomenal Q1 earnings report. Right now, the company is surging by around 20%. And the reason this is because they came out with earnings of 11 cents per share, which destroyed estimates from professionals because they were anticipated to bring in a loss of 10 cents per share, equating to more than a 210% beat on their overall EPS. And for a pharmaceutical company that is only trading at $2, this is extremely impressive. On top of that, they also posted revenues of $11.13 million for the quarter, surpassing estimates by close to 10%. Although I do want to make investors aware that compared to the same quarter a year ago, they brought in around $12.27 million. So year over year, that is actually a slight decrease, but it's not preventing the company from scaling in the future. Now, the reason why investors are piling into this company is because many bullish analysts believe this company could surge up to $9 over the next 12 months. And according to some of my subscribers, they've given price targets as high as $30, even though I can't find any substantial evidence that would equate for this company to reach such an outrageous price point. Even $9 seems somewhat overly bullish. However, I do want to point out that since the beginning of the year, Aquestive Therapeutics shares have gained around 54.1%, which is extremely positive. So this company is rapidly scaling, and look, it seems that it is still scaling, but with all of this positive news, we need to be smart and anticipate a pullback in the share price eventually, because soon this company will cool off. For me personally, I think this company is too risky. It really hasn't proved themselves yet, and I am not going to be an investor into this company. I just want to put it on your radar in case you are really into penny stocks. Lastly, let's talk about Tesla's TSLA shares and their recent metrics that they brought in. But despite this news, Tesla has actually increased in their overall share price close to 5%, and we will discuss why that is. Currently, Tesla's TSLA shares are trading for $168. However, I believe the company is easily worth $250 over the next 12 months. Tesla delivered over 75,000 vehicles which were made over in China in the month of April, equating to a decrease of 14.7%, which is really not that good. And comparatively, their rival BYD sold 209,467 vehicles in that same month, which would equate to an increase of 1.6%. Now, many people are wondering why Tesla is experiencing lower demand despite them cutting their overall prices, because they have started a price war over in China. But I really want to dive deeper here, because recently Tesla increased and raised their prices of a few of their models by $290, particularly regarding their Model Y and their Model 3 in Canada, China, Japan, and the United States, and this happened on Monday. I also want to make investors aware that Tesla is preparing to export a version of their Model Y over to Canada, which will be produced from their Shanghai factory. This not only will allow Tesla to create vehicles at a cheaper price point over in their Shanghai factory, but to export it over in China and sell it for $290 more than it was already trading for, that is going to increase their overall margins. And I do think over the long term, Tesla is a phenomenal company to hold, because they are more than just an electric vehicle company, due to them also specializing in energy storage and energy generation and a few other things. So overall, I would say this was a very positive news update for the general market and the particular companies that we dove into today regarding Sofi Technologies, Palantir Technologies, Aquestive Therapeutics, and Tesla stock. So for more videos and news updates just like this one, remember to go and annihilate that like button, just completely obliterate it. Subscribe if you are new. Don't forget to become a member of this channel, because my members literally keep me on YouTube. So thank you so much for those of you who are a member, and if you would like to become a member, you can become a member for as little as 99 cents, so you're literally not even going to feel it. With that being said, I hope you have a great day, and I will see you in the next YT video.